Hey everyone, if you're watching this, it's because you want to make money trading crypto and the Forex market. But there's just one tiny problem. You're not profitable yet, but don't worry, you're in the right place. Today, I'm going to show you the things you need to become profitable in 2024. Please make sure to click the like button and subscribe to our channel to get notified when we upload new video. The biggest bull run of crypto is currently happening, with many coins or crypto tokens potentially increasing in value by 50x, 100x, or even 1000x within the next few months. To buy Bitcoin or any currency, one needs to find a good crypto exchange. The exchange KCX is a popular exchange but has an unlimited coin selection, including popular ones like Bitcoin and Ethereum. If you want to find altcoins at 1000x, you can find them on KCX. KCX is a popular choice due to its excellent coin selection and low fees. By signing up with the link in the description, you can earn up to $30,000 in free money depending on the amount you first deposit. Another great exchange for those unable to sign up with KCX is the 2-Bit Crypto Exchange, which also has a greater coin selection, and 2-Bit is still a great option for futures and spot trading. To deposit crypto, users can follow these steps outlined here by the exchange and deposit the desired amount. This exchange makes it easier to deposit crypto by selecting the desired crypto, and then also clicking here to select the crypto network, and copy the address, and within 2 minutes, users can own Bitcoin or other currencies. Then, after depositing the asset, you can start trading on the futures market and the spot market, and other opportunities KCX has to offer. After signing up to the exchange, you can come up to the upper side to claim the new user reward, deposit your assets that are about to get listed on the KCX exchange, and finally, to join the futures trading competitions. By choosing a better exchange and utilizing the best coin selection and fees, users can maximize their cryptocurrency investment opportunities. I'm going to leave the links to both the crypto exchanges in the description, so you go ahead and click the link, and then you can create an account. Now in trading, there's 2 different parts. Part 1 is all psychological, and part 2 is all technical. Now we're not going to focus on the psychological part, but we are going to focus on the technical part today. Now in the technical part, there's 2 things that we should all put all of our focus on. Those 2 things, in my opinion, are price action and volume. We want to put all of our emphasis on price action and volume as much as possible. Now in the market, you must have an understanding of who is stronger. Is it the buyers or the sellers? Who is more aggressive? And the 2 components that we can start off on an introduction level to understand that are by focusing on price action and volume. As mentioned before now, if you have so many different lines on your chart, just get rid of it. When I first started out trading over some years ago, my chart was filled with so many lines, and I wasn't able to identify what's a good point to enter, what's a good point to exit, or how I should actually manage my position. Over time, I realized having so many different lines and having so many different things on my chart was actually just noise. And the 2 things that everything boils down to are price action and volume. Now I keep repeating these things because I want it to be hammered into your brain to understand that these are the 2 most important components of trading. So now let's break down what volume is. So volume is the transactions in the marketplace, right? So if you see something that has a volume of 1, that means there has been a transaction of 1 sale. Now, one thing that people get very wrong about volume is that they think that volume indicates there's more buyers or more sellers. There's no such thing as more buyers or more sellers in the market. But what does exist is seeing more aggressive buyers or more aggressive sellers. So when you see something has a volume of 1, that initially means that there was a buyer and a seller. They agreed on a price, and the transaction happened. If we see volume at 10, that means 10 contracts or 10 shares or whatever were transacted at 1 price, which means 10 buyers or 10 shares from one side had to be sold, and 10 shares or contracts from one side had to be bought, which equates to number 10. Now, what we can decipher from the volume is we can decipher if the buying side is more aggressive than the selling side. That is something that we can decipher by volume. A lot of traders are essentially overlooking this part or overlooking this component of volume right now. To decipher who's stronger, we have something called an auction market theory. So the market is a whole auction place where we have buyers and we have sellers trying to find an equilibrium in price on every transaction. We have something that you guys have seen before, where we have the bid and we have the ask. The way that works is we have people that place orders, we have traders that place orders, and we have institutions that place orders. When they place orders, they either hit a market order or a limit order. And in the marketplace, we can see the bid price and we can see the ask price. And we can see everything being executed on time and sales. Now, obviously, if they're placing a market order to sell, they're being aggressive on the buy or sell side, depending on what side the market order is going in, or they're placing a limit order. Now, when they place the limit order, you start seeing that on either the bid or the ask. So if a financial instrument is going higher and higher, and volume is also going higher and higher, that means that there is a support of interest at those buying levels or those new levels that the market is going to. But imagine the price of something is going higher and higher. The volume is staying flat, or volume is going lower. The low volume is indicating that there's no interest at those levels. But if volume keeps going higher and higher, that will showcase that we are seeing interest at those particular levels. So that's the basic understanding of how volume is one of the most important things, which is right next to price action. Now, as I mentioned, there's a lot more to volume. There's a lot more to understanding order flow. But before we dive into that, like I said, let's go into the second part, which is understanding price action. Now, to me, price action has always been king, and that's one thing I really focus on. I like to look at what price is telling me. I'd like to focus on what is happening in the market. What is the action that the market is showcasing? What is the accepted price that the market wants? What direction is the market going in? And once again, I combine that with volume. As I mentioned now, in price action, there's a lot of different components that you guys can look at. Something like looking at candlesticks goes into looking at supply and demand, goes into looking at support and resistance. Just putting those pieces together. And the idea is to understand where the strength is, to understand what areas the market is comfortable trading in, right? What area is the market accepting a certain price now? If the market thinks that the market's current share price, stock price, forex price, or whatever it is that a fair value price, the market will trade around those levels now. There's times that that fair price will adjust due to economic news, due to Fed announcements, due to earnings or something, that presents in the market. And that will create that imbalanced and aggressive buying and aggressive selling. And sometimes we might see aggressive buyers step in and they might drive the price higher. And we kind of see that on charts. And seeing that on charts allows us to visualize and understand what the market is telling us, right? Is the market actually strong? Is the market actually trending? Is the market having a strong breakout or breakdown? Is the market really selling off, or is it just the trap? And putting those two things together gives us a huge understanding of the market within itself. The two things that will be ahead is price action and essentially volume of the transactions that is happening in the marketplace. So if you have a ton of nonsense on your chart, take it off and simplify your trading. And like I said, focus heavily on price action and volume. And use these two things to build your trading strategies. And use this to build a strong understanding of markets. That's a strong understanding of why the markets are going up. Where are we seeing an imbalance in price? Where are we seeing an imbalance of strength in the overall market? And that will help you understand everything on a much deeper level, instead of, clogging your charts with useless data. If you are a more advanced trader that has been trading for years and understands price action volume on a deeper level, like I said, I will make a video on order flow, how I look at the markets at a very deep level, right? What I'm touching right now is just the surface level. There's deeper layers in this that we want to understand, that where we can really truly understand the strength, the imbalances, where real supply is sitting, where the traps is sitting, where we have issues with liquidity and so on. There's deeper layers that we will break down in the upcoming videos. But if you are not exposed to any of this, once again, take a step back, simplify your trading. Guys, don't overcomplicate it. Don't go looking for crazy chart patterns. Understand volume and price action, combine them as layer one. And like I said, in the upcoming weeks, we will build on to layer 2, 3, and 4. With that being said, I hope you guys found value in this video. Comment down below. Let me know what you guys use in the markets to trade, what indicators you use, what has worked for you. I would love to hear your thoughts. And with that being said, I hope you guys found value. And if you did, give this video a like and subscribe to this channel. Thank you so much for watching, and I will see you in the next video.